Hello everyone, and welcome to this week's special presentation entitled Protecting Profits. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and it's my pleasure to give your presentation this evening. You're guessing, you're wondering, why are we even thinking about talking about protecting profits? Markets for the most part is moving up and I'm making money in my positions, so why are you doing this? Well, there's a lot of things going on, and a lot of people have been giving us questions about, hey, I own SMCI, which is one of the best stocks in our database. I'm up a lot. What should I do? So protecting profits seems like it's the right thing to do because there's a lot of money out on the table that you don't want to let go away. Well, let's talk about the current market's conditions. First, we have the July high. We recently talked about the July high, and it's something that our founder, Dr. Bart DeLito, has talked about time and time again every year. The July high, once that hits, then the market is prone to pulling them down until the fall time. We are at the July high. Two, as a VectorVest subscriber, you have access to a powerful tool that no one else has, called the MTI, or the Market Timing Indicator. It lets us know when the market's looking for a top, and it lets us know when the market is looking for a bottom. Again, valuable information, worth the effort of being a VectorVest subscriber to use that indicator to help you to notice these things. We're going to get deeper in that in a second. Now, the VectorVest tools for protecting profits. So I could have gone elaborate and done a lot of different things with support and resistance and moving averages and fibs and so many different things. I wanted to bring us back to the understanding of just how powerful the VectorVest system is. And we've got tools. One, stop price. The stop price is a 13-week moving average adjusted for the fundamentals of the stock. So the important part of that is adjusted for the fundamentals. When the fundamentals on the stock are good, we're going to lower that stop price to keep you in that stock longer. But when the fundamentals are not so good, we're going to raise that stop price to get you out of the stock faster. You'll hear us say things like use it as gospel or guide. Every stock in the database has a line in the sand or a stop price. That's a great place to start. How about recommendations? We give a recommendation, a buy, hold, or sell recommendation on every stock every day in the entire database. Let's say you have a stock that you bought and it's a buy recommendation. Well, how about when the stock moves from a buy to a hold? That's a great time to protect your profits. Well, maybe you bought a stock in the VectorVest system that's already a hold. Well, if it moves to a sell, that's a great opportunity to take that off the table. Well, we all know that earnings is the engine that drives a stock's price higher. What if we look and find that we're in a stock, but earnings are starting to fall? That's a great tool that lets you know when to protect profits. Always keep your eyes on overvalued stocks. Many of these stocks go up and make you money, make you good money. But our mantra is to have you in safe, undervalued stocks that are rising in price. But sometimes you just can't get away from buying those overvalued stocks because they're just rocking and rolling, and that's fine. But keep your eyes on those stocks because many times those are the stocks that'll fall the fastest first. That's a great way to protect your profits. So now let's talk about certain techniques that you can use to protect your profits. Always look at a stock graph. The picture is always worth 1,000 words. I can look at a stock, know that I'm in the stock, start losing a little bit of money on it, look at the graph and help me to confirm whether or not I need to take some protective action. Tighten stops. Now, this is something that people say all over and over again. What does that mean? Well, let me give you an example. Many of you use stops like a percentage gain, percentage loss, like a 30-10. A 30% gain, you'll get out of the stock. 10% loss, you'll get out of the stock. The bad thing about that, though, you're only going to get out of that stock at one of 2 points, at a 30% gain or a 10% loss. How about tightening stops? So have it, all right? Instead of a 30% gain, you're willing in a market that looks toppy to take a 15% gain. And on the 10% loss, half it. Move it to a 5% loss. Now you've moved your price action or price movement and you tightened it down. So you're going to take your winnings a little earlier. That's fine because you can't go broke taking a profit. And you're going to take your losses a little quicker because that'll help you to don't let yourself get into a position where you let a stock that's dropping down become a big loss. How about taking half off the table? Instead of getting totally out of the stock, take half. If the market continues to rise, you're still in the position, but only half of it. You've locked in good profit. Now you're playing with the house's money. Well, a good position to get out, good way to get out is to close the position entirely. Now, you notice that this video is not all about scaring you. It is about informing you on what to do in the stocks that you currently own. Many of you still have those questions. Man, I don't know what to do. Let me tell you something. I'd rather you do something than to do nothing at all. Keep that in mind. Something is better than nothing. And a lot of times, the nothing yields big losses. For those of you who are option players, sell a covered call. That way, if there's a stock that you're in, there's a lot of stocks that are out there that are worth it for you to be in them long term. But when the market moves down, you don't want to take the brunt of a full pullback in the stock without having something to alleviate that. Selling a covered call allows you to take some money and sell a call and get some money. You sell a call, you take in a premium. That premium helps to absorb some of the loss that you'll get on capital depreciation. It's a great way to stay in a long-term stock that you really like without taking the full brunt of the pullback. All right, now let's get into the VectorVest system. Starting from the home page, all right? Start from the home page. Let's talk about what's going on. Our guidance has been for the last couple of weeks about be careful. The market's looking toppy. Be careful. Nothing about panic. We've said nothing about panic selling. But we have told you to be careful. Watch the views every night. The guidance that we give keeps you abreast of what's going on. That's a great way to start in regards to protecting profits. Looking at the color guard. What's the predominant color? Yellow. Caution. All right, there it is right there visually. More caution than anything. Primary wave is back and forth, up and down. The underlying trend of the market, MTI, has been up, but up in that range between 1.5 and 1.6. This speaks volumes. The market is looking toppy. The slowest, most conservative call we have is the confirmed call. We're still in a confirmed up call. This applies to everybody, whether you're a longer-term investor, a swing trader, or more of an aggressive trader. All of these things apply to all of you. So let's take a deeper look. Let's go to the graphs. Let's go put on the market timing graph. And I've got a 1-year graph on. Here's the VectorVest composite, steadily moving up. Again, people are probably saying, why are you talking about protecting profits? The market's moving up. Well, we got a new high. It's a new high in July. Towards the end of July, but could that be the precursor of the market potentially pulling back? Let's talk about potentiality. Here's that MTI. When the MTI gets to that level and it's cast on a scale between 0 and 2, when it gets to that level of 1.5 to 1.6, the market is looking for a top. Over the last year, let's talk about this. The higher it goes above that 1.5, the deeper the pullback potentially. Back here in August of 2022, nicely above that level of 1.5, what did the market do? It fell. Well, the higher it goes above that 1.5, the deeper the fall. Notice that we got to that level here in December of 2022. Right at the level, the pullback wasn't nearly as bad. We stayed above that range for a little bit here in the February, March of 2023. The pullback, there it is. A little bit of a pullback here, not quite at that level. The pullback wasn't nearly as big. But look at where we are now. Back to that level of 1.5, a little bit above it. It could be prone for the market to pull back. This is why we're doing protecting profits. All right. So visually you understand. Verbally you now understand. Put those two things together. Let's put it into practical application. Let's go to the Viewers tab. And I figured the best place to start would be the stock viewer. Could I have taken some of your stocks? Well, this is a recording, so I can't see what stocks you have. So we go to the stock viewer, where we've got the stocks sorted by VST. These are the stocks that many of you are making good money on. We've got the up days, we got the down days, but a day like today, the majority of these stocks are making money. Look at CLS up 15%. Go down the list a little bit. USAP up 5%, and so on and so forth down the list. But at some point in time, you got to understand what goes up must come down. So let's talk about some of those techniques. Buy recommendations. All of these are buy recommendations, so we're fine as that goes. If you want to say to yourself, let's wait for the recommendation to move from a buy to a hold, that's a great opportunity to either close the position or take half off. All of these stocks have great earnings growth. These are really good stocks, all right? Remember, I talked about overvalued stocks. Be careful when you're looking at an overvalued stock. Let's go see. Here's one, Celsius. This is moving up. RT is moving up, but that's great. Way overvalued, though. And when the market pulls back, these are the types of the stocks that will pull back faster because a lot of people made a lot of money in these stocks. All right, fundamentally sound. Everything is good about the stock, but it is grossly overvalued. All right, let's do this. Let's take a look at the graphs. We're going to keep this on like a 6-month graph. Let's take a look. I'm taking off moving averages. Let's go to the layout. Let's go put on VectorVest Simple. Remember I talked about the stop price, gospel or guide. All right. Stocks price moving up, bottom left, top right. RT looks good. Earnings, the engine, the whole 9 yards. At some point in time, folks, you've got to be making some kind of determination about when you want to get out of the stock. Earnings looks good. Right? RT looks solid. Stocks price is moving up. At some point, you go and you say to yourself, the market looks toppy. Well, maybe I tighten my stops. Maybe hitting a new high, maybe I just leave it alone, or maybe I start to at least think about taking half off the table, especially because the market looks toppy. I don't want to give all of this back. Let's go to the next one. Same scenario. ACLS coming off the high, came down, found a level of support, bouncing back up. But look at the stop price, doing a great job. What I really like about the stop price is it keeps you from being anxious. Notice that even when it pulls back, look at that pullback. Never. Now, here's what would have been a good opportunity. Went from a buy to a hold. I wouldn't have mind taking some of that off the table. Look at that right there. Put that line, look at that, buy to a hold. I probably made some money right here. And then if the market conditions warrant, it goes back to a buy, get back in. I'm still in it right now. Once this goes to a hold, though, I probably made a really good profit on this stock. That's a great opportunity to take some profit off the table. All right. And at the hold, maybe you take half off the table. And look at that. You're still riding the other half as of right now. Let's go to the next one. This stock got to be a sell. That was a good opportunity to get out. But when it went from a buy to a hold, that was a good opportunity. Still, it ramps that back up. Boom, shoots back up. Buy recommendation. I'm back in it. RT bumped up. Look at earnings per share. Stock. Look at the bars too. That's another indicator. Look at the bars. Once the bars start getting smaller, let's go put on volume. Is volume starting to fall as well? Add parameter. Let's go to price volume. Let's go to average volume. Is average volume fall? Yep, there you go. Look at the bars getting smaller. Less people are getting into it. That's another way. I didn't even put that as a piece of the tools. But watching volume fall, that means less people are getting interested in the stock. That could be a good opportunity to take some profit off the table. Same thing. Wow, look at this. All over the place. This is a little bit more of a volatile stock, even though it's a top VST stock. But look at the earnings running, average volume pulling back. All 3 recommendations throughout the time. Again, moving from a buy to a hold is a good opportunity to take that off the table. Went to a sell. That would have been a great opportunity to take that, protect that profits there. But now back to a buy. Moving on up to the east side, right? It's moving up to that deluxe apartment in the sky. Right now, look at that. It's coming off the high. That's a good opportunity to start considering taking stuff off the table, especially knowing the market is toppy. And folks, I can go through the graphs and do this same kind of analysis time and time again, but initiating some of these techniques, looking at what you're looking at to help make sure that you don't let a big winner turn into a big loser is ideally what we're looking for. Stock that's moving, look at the bars getting smaller. Now this one, the average volume is still running. Nothing's telling me to get out yet, but it's coming off the high. Knowing that the market's looking toppy, I might think about taking half off the table or tightening stops. Folks, if nothing else, like I said, it's better to do something than to do nothing. Even if you take half off and the stock's price goes up, you're still riding in that stock with the other half, but you've guaranteed yourself by locking in profits, and you can't go broke taking a profit. But you can go broke if you do absolutely nothing to protect your profits. Folks, it's been my privilege. I wanted this to be straightforward, not a whole lot for you to have to think about. The power of the tool makes it simple for you to make these decisions. So hopefully this opened up some doors, turned on some lights, and put some perspective on some of the stocks that you're owning right now to help you to maximize your potential, your profit potential. Folks, it's been my pleasure. Once again, my name is Glenn Tompkins. Heed the information. You do what you need to do because everybody invests differently. Until the next time, folks, see ya.